When you're shopping for a new car, you've got two big decisions to make. First, do you want to lease or finance? Second, what kind of car should you get? With car prices at an all-time high and interest rates climbing, you need to be smart about both choices to avoid overpaying. We'll explain how leasing versus financing actually works so you can decide which makes more sense for your budget and driving habits, and we'll break down the pros and cons of each. So stick around to find out which option could save you thousands over the next few years. Hey, welcome back to our channel where it's our job to help you navigate your money better. When you lease a car, you're essentially renting it for a fixed period, typically 2 to 4 years. You make monthly payments throughout the lease term, and at the end, you simply return the vehicle to the dealership. The dealership then sells the car to someone else and begins the process again. By contrast, when you finance a car, you're borrowing money to buy the vehicle outright. You pay off the loan over time with interest, and once the loan is paid off, the car is yours to keep forever. Leasing can be appealing because the monthly payments tend to be lower compared to financing. That's mainly because instead of paying for the entire value of the car, you're paying for the portion of the car's value that it loses during your lease term. So let's say you lease a car for 3 years. If the car depreciates by 30% over that time, you'd pay for that depreciation rather than the whole cost of the car. Lease payments are also often adjusted to account for any residual value. It's the estimated value of the car after the lease term is over. If the car has a residual value of 20%, meaning it is estimated to be worth 20% of its original price at the end of the lease, that amount is subtracted from the total cost. You're required to pay lowering your monthly lease payments. For example, let's look at a hypothetical situation. Now, let's look at financing the same car. If you put $2,000 down, you would finance $38,000 at a 4% interest rate. Your monthly payment would be approximately $730 for 60 months. That's the equivalent of roughly $625 for 36 months. Now you can see that in this example, the monthly payment for financing is higher than if you had leased the car. This illustrates a major benefit of leasing. Lower monthly payments allow you to afford a more expensive car within your budget. For instance, you might be able to afford a $40,000 car with a $2,000 down payment, and a $685 monthly payment through leasing, but not through financing at the same terms. This brings us to the first key consideration when deciding whether to lease or finance. Think about your budget and affordability. Leasing offers lower monthly payments, making it possible to drive a more expensive car if you desire. However, there are some potential drawbacks to keep in mind. First, there are strict mileage limits on leases, typically ranging from 10,000 to 15,000 miles per year. You can usually pay extra to exceed those limits, but it can get pricey. Also, leasing doesn't build equity like financing does. At the end of your lease, you simply return the vehicle. And finally, leasing can be more expensive over time than financing. This is because you're essentially paying to rent a car for a set period, rather than building ownership in the vehicle. Financing, on the other hand, comes with several advantages. You can drive as many miles as you want without penalty. You can customize the vehicle to your liking. And as you pay off the loan, you gradually build equity in the car. However, financing also has its drawbacks. Monthly payments are typically higher than leasing. You're responsible for maintenance and repair costs once the warranty expires, which can get expensive as the car ages. And if you want a new car before paying off the loan, you'll have to sell or trade in your current car, which may have significantly depreciated in value. Let's consider the types of drivers who might prefer leasing. If you prioritize flexibility and don't intend to keep your car for an extended period, leasing might be appealing. People with short commutes or predictable driving habits, who consistently stay below 10,000 to 15,000 miles annually, may find leasing suitable. Drivers who upgrade their car frequently and do want to deal with selling or trading in their current vehicle may also gravitate toward leasing. Additionally, individuals who do not have the funds for a substantial down payment or closing costs associated with financing might prefer leasing, which typically has lower upfront costs. Now let's explore who would benefit from financing. Drivers who drive a lot, particularly those with long commutes or who travel frequently, might prefer financing, as it allows them to avoid the penalties associated with exceeding mileage limits on leases. People who intend to keep their car for an extended period beyond the typical lease term of 3 to 4 years may find financing more advantageous. It enables them to gradually build equity in the vehicle and ultimately own it outright. Additionally, individuals who plan to modify or customize their car heavily might opt for financing, as leasing often restricts such alterations. Finally, people who don't qualify for low lease rates due to credit history or income might prefer financing. Even though monthly payments are generally higher, they can still manage their monthly budget by choosing a more affordable car. That brings us to the future of cars. The automotive industry is rapidly evolving with new safety features, autonomous driving advancements, and a shift toward electric vehicles. These innovations mean today's cars may become outdated quickly. If you want to stay current with the latest technology, leasing provides a way to drive a new car with the newest features every few years. However, if you're confident in your vehicle choice and don't mind holding on to it, financing allows you to keep your car for as long as you like. To sum it up, leasing is smart if you want lower monthly payments, access to the latest features, and minimal long-term commitment. It works well for those with stable routines and moderate mileage needs. Financing is best if you drive a lot, plan to keep your vehicle long-term, and want the freedom to customize or sell whenever you want. Overall, the smartest option depends on your personal financial picture and lifestyle. No matter what you choose, carefully review the terms and conditions of your lease or loan. Understand the associated costs, and ensure the monthly payments fit comfortably within your budget. If you found this video helpful, give it a thumbs up and share it with anyone who might benefit from this information. Remember, the best decision for you depends on your unique circumstances. Consider your budget, driving habits, and long-term goals as you weigh the pros and cons of leasing versus financing. Don't rush the process. Take your time to compare options and make an informed choice that aligns with your needs and preferences. Whether you decide to lease or finance, drive responsibly and enjoy the freedom and convenience a car provides. Thanks for watching. Check out our channel for more tips on navigating your money better. Remember to subscribe to get more great money tips delivered right to your inbox.